Good morning, good day, good evening. My name is Johnathan Regan, also known as New Questions from blockchaineducation.com.au. Today we're going to talk about crypto. Is it dead? Is it dead? I don't know. Is blockchain dead? What is blockchain? What is this cryptocurrency stuff? I'm going to explain some of this stuff in a way that perhaps you may not have considered. Certainly not in the way that the mainstream media would have you perceive this particular industry. Right, what is cryptocurrency? The easiest way that I look at cryptocurrency, I don't think of it as a currency, as a way to buy and sell things. I don't think that's a particularly good use case scenario for this sort of stuff. If you think about buying a share in a company, you're essentially buying a slice of ownership of that particular company. And the idea is that if the company does well, then presumably your share price will go up and that you could sell it at a later point and make money. So the way I look at it, crypto is essentially, cryptocurrency is another name for digital tokens based on the blockchain, which represent a slice of ownership of an existing blockchain project. Now, if that blockchain project is called Ethereum, for example, if you own Ethereum, you're not only helping the Ethereum Alliance and the Ethereum organizers create that project by funding them, essentially you buy that cryptocurrency, you're helping to fund that project, but you're also kind of gambling or taking a bet that Ethereum as a concept will go up in value in the future and that your digital token will actually increase in value as well. So I look at cryptocurrency generally more so as an investment, as an asset class that you can buy into, and presumably if you buy at the right time that will go up in value in a correlation with the success of the blockchain project that you're supporting. So what is crypto? Well, crypto obviously is an abbreviation of the word cryptocurrency, and I think it's used by traders to kind of describe the cryptocurrencies that are actively traded on exchanges. So not all blockchain projects that issued tokens are actually listed on exchanges. In other words, you can buy directly from the blockchain project developer themselves, but that doesn't necessarily mean that you have a fluid way to buy and sell that particular coin. Now, what's a coin? Well, coin is probably a poor name, a poor piece of vocabulary to describe a cryptocurrency digital token. So a digital token exists on the blockchain. It's also known as cryptocurrency. It's also known as coins. I assume that coin came from the word Bitcoin. So some people will refer to Ethereum, for example, the number 2 cryptocurrency. They'll call that a coin. You know, you're trading different digital tokens, different coins. Even though Ethereum technically has nothing to do with the physical coin, it really has nothing to do with Bitcoin as a concept, but it's just part of the vocabulary or the lexicon of the industry. So the concept of a digital token, a coin, and a cryptocurrency or a crypto, they're all basically one and the same. I prefer to, from a formal point of view, call these digital tokens because that reminds me that what we're actually investing and trading is actually kind of slices of ownership or slices of influence within an existing blockchain development project. That kind of brings me back to earth. It's not a coin, it's not some sort of physical commodity. It's got nothing really to do with blockchain, or Bitcoin rather, not blockchain, obviously has a lot to do with that, but has nothing to do with coins. Coins just seems like such a silly word. So can you make money with any of this sort of stuff? Well, yeah, as a matter of fact, you can. Just like you can in traditional markets, trading shares and investing in companies that are at the early stage of development, you can make a lot of money in cryptocurrency trading by short-term and long-term investing in digital blockchain projects that are set to change the world. And in fact, we've seen a lot of that recently where blockchain technology is actually solving real-world problems. Now, there are thousands and thousands of these digital projects, and there's thousands of digital coins, digital tokens, blockchain, crypto specific projects out there. And it's up to you to try and decide, if I'm going to go and buy some of these digital tokens, these ownership stakes in some of these projects, you know, potentially if I make the right decision, I could make some money. And obviously that's where blockchaineducation.com.au comes in. It's part of a blockchain finance group that I founded with my CEO and my best mate. And we've been doing this for like several years now, and we happen to know which of these crypto projects actually is worthwhile investing in. Even if it's only a short-term investment for a few days, that still means you can make a lot of money, or a lot of Bitcoin, depending on what you're interested in. So what about all this bad news and this, you know, crypto is a scam, it's used by criminals, it's gone down in value, the bubbles burst, all that sort of stuff? Well, I would kind of hesitate to say that that's just lies. I know there's a lot of misinformation and myths in the industry that are being perpetrated by traditional market traders and brokerage companies who have a vested interest in keeping what they've got going at a normal clip. So nobody wants to take customers away from Forex or out of the stock market or derivatives or options or commodities. They're making lots of money with people trading those particular assets. So this new thing called crypto, any chance they get to kind of stab it with a stick, they do it. And these companies obviously are very large, and a lot of them own media outlets and large chunks of media outlets. So there's this overwhelmingly negative dialogue that's been going on for the last couple of years, simply because Bitcoin went down in value from the all-time high of 19,400 down to roughly 3,200, and then it sprung back up. We're now back to around about $8,000 for Bitcoin. So it's all a matter of perspective. If you bought Bitcoin 3 years ago to this very day, Bitcoin would have cost you $600. It's currently sitting at $8,000. So an extraordinary return on your investment in less than 3 years. But a lot of people will say, yeah, but I missed the boat, I missed the ship, it's all gone. You know, there's no opportunity. Well, yeah, there is, because if you bought Bitcoin only just 8 or 9 months ago, then it was at 3,200 and now it's at $8,000. So more than triple your money, well, basically triple your money if you count the recent high, in less than a year. So that's just Bitcoin. Cryptocurrency or other digital tokens are moving in and around that Bitcoin price, and they're doing even more phenomenal things. As part of blockchain education, you'll see that we track these cryptocurrency digital tokens that are doing 100% in a single week, and they're consistently moving around, flip-flopping as the buyers and the sellers, the bulls and the bears, attempt to try and negotiate what is a fair price for these slices of digital ownership of these blockchain projects. So, but I heard it was used by criminals. Cryptocurrency in the past, and probably to this very day, is used by criminals, certainly not as much as cash, and nobody's throwing their cash in the fire and burning it. The end of the story is that criminals will use some form of value transfer, and cryptocurrency has been used. But the blockchain is quite extraordinary in the sense that every single transaction is immutable, which means it cannot be changed, and it's permanent. And the network is distributed and it's decentralized. And all these sort of fancy words basically means that if you're going to run a criminal enterprise using Bitcoin or other digital tokens, every single transaction that you ever do is beautifully immortalized onto a blockchain that will last forever, that can't be changed by anyone. So you're kind of leaving a pretty good paper trail, so to speak. This is why a lot of criminals continue to use cash, because it's essentially an anonymous vehicle to allow them to conduct illicit activities. So I wouldn't put much faith in the mainstream media telling you it's a negative, bad, criminal-led enterprise. That's not true at all. The biggest use case for cryptocurrency is actually cryptocurrency trading, because this is a new type of asset class, and that's used by hundreds and hundreds and hundreds of thousands of traders all around the world every single day of the week. Most of those traders have gone through an AML, anti-money laundering process, the KYC, the Know Your Customer process, scan passports, they've declared security numbers, social security numbers, bank accounts, residential addresses, all that sort of stuff. So these are the last people likely to be committing crimes using cryptocurrency. And at the end of the day, it's not a very useful type of system to commit crimes with. It's much better to actually do it with cash anonymously, which is exactly what most criminals do. So I wouldn't let that kind of side story convince you that the whole thing's a scam. That's not true at all. All right. But I heard that mining and Bitcoin investing and all that sort of stuff was dead. Yeah, that's true. It's true if you're a sort of a residential, low income or middle income type of person who doesn't have a lot of money. It's really unlikely that you can mine Bitcoin. Bitcoin's got to the point now where people are mining such large quantities of it in such large installations that you're competing with the likes of Chinese conglomerates that have literally bribed local officials in China to siphon off electricity from a hydroelectricity dam, run it down into a giant super football stadium sized warehouse full of tens of thousands of Bitcoin mining machines. So that's at the top end. These are the guys who are mining Bitcoin and essentially trying to solve that hash to get rewarded. if you're just thinking about buying a $5,000 or a $10,000 machine to mine Bitcoin, you're just a drop in the ocean. And at the end of the day, mining Bitcoin is now an industrial grade situation where it's extremely difficult to make any money by mining Bitcoin unless you really know what you're doing and that you've got the right equipment, the right contacts, and you know exactly when to sell Bitcoin at the right price, all that sort of stuff. That's not necessarily true with the other cryptocurrencies that are traditionally much younger than Bitcoin. The difficulty level on mining those particular coins is much, much lower than Bitcoin. So there's not so much competition. Those coins have, or those digital tokens have much lower values. And at the end of the day, if you're mining those other cryptocurrencies, of which there's thousands, you're essentially supporting those blockchains to allow the transactions to flow on those networks. There's lots and lots of opportunity there in the cryptocurrency mining industry, not so much in the top, say, 3 or 4 coins, because it's become ultra competitive. And unless you've got a large amounts of capital to put in, then you're kind of fighting an uphill strategy. So yes, it's true that the boat might have sailed on mining Bitcoin, but certainly not on other cryptocurrencies. A lot of money to be made, and even more money to be made trading crypto, which is why I started blockchain education with my partner. We basically advise people on how to trade crypto, because we've pretty much found that it's even more lucrative than mining all these different types of cryptos. I'm staring over this way because I have my notes over there, just so you know why I'm looking off camera. Are all these coins scams? No. The reality was that it became so easy to launch an ICO and a fundraising round using digital currency back in 2016-17 that a lot of people were doing it. And a lot of those people, let's say 20% of those people, were pretty horrible in terms of putting together a project, claiming and promising the world, and never actually delivering. This created a sort of a clampdown by the FTC and the SEC. The Chinese government actually banned crypto in general, and there was all sorts of laws that happened in Europe and stuff. We'll talk about those in a second, but the reality is that if your cryptocurrency of choice, your digital token, is listed on some of the world's largest exchanges now, it's very, very likely that this is not a scam in any way, shape or form. It's actually an environment where you can buy and sell digital tokens that represent a slice of ownership of that particular project. And you're kind of placing a bet that the particular token is going to go up in value because that project is going to continue to do better and better and better. We saw that recently with BNB, a coin or a digital token issued by the world's finest exchange, Binance. Binance issued that when they opened, and the Binance coin, as it's come to know, BNB, has gone up in value ever since. And that is in direct correlation with the fact that Binance has become the world's best exchange. And so obviously you originally buy it, it goes up in value, and of course you can still buy it today if you believe that it's going to go up in value. So not all cryptocurrencies are scams. In fact, I would say a very small number of outstanding cryptocurrencies that exist today have anything to do with scams. But if you want to make sure, then probably only invest either short or long term in coins that are listed on major exchanges that have already passed most of these rules by the FTC and the SEC. They've already managed to get traction in the market. They're already being traded by people and they're listed on these major exchanges. What about traditional market trading in comparison? We touched on that briefly before, and I would say that if you're interested, or if you're coming from an environment where you're trading stocks or commodities or forex national currencies or doing things like options or derivatives or puts and all that sort of stuff, they're very established, very liquid, very large markets, and the players in those are moving trillions of dollars. In the Bitcoin and the cryptocurrency market in general, we're looking at maybe $1 billion or $2 billion a day of overall movement. In those other traditional markets, we're talking about trillions of dollars. And as a result, there's some very big players in those industries, and the brokers actively take the opposite side of the retail traders, and essentially they make money whether or not you make money or lose money. In fact, they don't really care, which is why a lot of the educational companies in that traditional market space, they really don't care if they teach you correctly. They don't care if they throw out some indicators or some funny ideas that work for a period of time and then you get blown up, because at the end of the day, they're making money by referring you to the brokers on whether or not you win or lose. They take their cut. So in terms of that business model, the last thing they want to do is for a company like us to come along and actually teach you correctly on how to make money, because we don't take a slice of you. Our entire agenda is to help you make money. If we help you lose money, then you obviously won't listen to us. So from an educational point of view, you'll leave and we won't make a cent. Compare that to traditional markets where they make money whether or not you win or lose. They honestly don't care. Churn rate is the most important thing for them. So if I was to say that there's a conflict of interest in those markets, in the sense that it's not really important whether or not they give you the right information at the right time, because they're going to win either side, that's a very real thing. In fact, a lot of brokers will take the opposite side of the retail traders, which is why we often see so many people are sort of gambling long or short on a particular situation, and then the brokers, suddenly everything goes in reverse and the brokers make all the money and everyone loses money. So in this market, I would say that it's a little bit more wholesome. There is manipulation in the market for sure, but the entire thing is not really skewed the way it is in the traditional markets with the existing brokers, and the way that that conflict of interest is ingrained into the very fabric of how that whole system trades. It is, unfortunately, a good reason for those particular firms and companies and educators to sow discord, to sow misinformation, to throw out myths about, crypto scams and declining values and criminals and, all that sort of stuff, FTC and SEC regulation, all that sort of stuff. So you've got to keep an open mind. This is a new type of investment class, and there are people out there who don't want it to succeed because they're quite happy with the status quo. So that brings me back to this question: is cryptocurrency dead? The answer is no. Firstly, there's thousands of cryptocurrency digital tokens that represent thousands of different projects now, and the amount that these are being traded are reaching all-time highs over and over again. So the amount of interest and the amount of inter-coin trading against US dollars and also against Bitcoin and against other coins, that's actually hitting all-time highs. We see the CEO of Binance, the world's most impressive exchange, by volume, ultimately saying that they're hitting all-time highest trading days consecutively, which is a really good thing. It means that people are understanding that this new type of investment class is worth trading, and they're trading these projects. Some projects are going up, some projects are going down, and they're trading them against US dollars and against Bitcoin on a day-to-day basis in increasing fashion. We also see that the number of Bitcoin transactions is consistently increasing across the blockchain. Same with Ethereum. In fact, Ethereum, the Ethereum blockchain, which is used to power most of the US dollar tether situation, it almost reached capacity the other day, which is an ongoing struggle for these companies to continue to improve the capacity of these networks to run financial transactions across the blockchain. So most certainly, if you look at the sheer numbers of who's using it and how much they're using it, certainly it's not looking anything like cryptocurrency is dead. We did reach a situation, a bit of a stalemate with the SEC and the FTC, where things started slowing down, and it seemed a little bit confusing as to what was actually going to go on. Were these digital tokens considered securities? Were they supposed to be registered and sold on licensed exchanges? What was going on there? We tend to find that most Western governments have had a fairly lenient view on things, a kind of a sort of a let it go attitude, and some of the laws that they've put into place are really there just to protect short-term investors, retail investors, and even the institutional guys. But I would say right now that the laws that are in effect are actually quite good. They're heavy on protecting the consumer by forcing blockchain projects to jump through a whole bunch of hoops. But at the end of the day, they're also giving flexibility to the traders to be able to trade and essentially let the market establish a price for these digital tokens. So I would definitely say that cryptocurrency is not dead. It's not being harassed by the FTC or the SEC in America, although cryptocurrency trading is essentially illegal in relation to the government-owned and sponsored banks in China. That doesn't necessarily mean that crypto is dead. Just because the Chinese market is essentially on the sidelines right now, that doesn't mean anything. We see massive volume coming out of Europe. We see it being used in South America as an alternative store of currency compared to declining national currencies. We see it used in America and all through Southeast Asia and Japan and Korea as a speculative asset. So extremely exciting, and a lot of money is flowing in. A lot of venture capital money is flowing into the industry to go along with the fact that the trading's continuing, the projects are developing, and this technology, the blockchain technology, is actually changing the very fabric of our society. Whether or not you know it or not, is actually happening. So let's talk about KYC, AML. Actually, we've talked about KYC, know your customer, AML, anti-money laundering. So that was in effect necessary, and that's come in just like when you go and open a bank, at a bank account, at a bank rather. You need to provide a certain amount of ID to transact money. We've seen that happen with all these major exchanges. Certain laws were put in place that sort of shuffled some exchanges out of some jurisdictions. But at the end of the day, there's a certain level of checks and balances that need to be achieved. And I personally believe that the industry's got it right, and that there's a sort of a sweet spot right now to be trading cryptocurrency. The traders know what's expected of them. You've got to pay your taxes. They know the sort of money that they can make in such a rapidly short period of time. The exchanges know who they're actually dealing with. These are not terrorists or criminals. These are people just like me and just like you who are trading, as opposed to trading stocks or commodities or national currency through the Forex markets. This is just a new type. This is a digital token. This is crypto. This is cryptocurrency. So what is this blockchain technology? Well, blockchain technology was basically created by a bunch of scientists years before Satoshi created Bitcoin. Most people don't know that. And most people also don't know that Satoshi is essentially a ghost. Nobody came forward, no group, no person, no man, no female came forward and claimed to be the owner of Bitcoin. They essentially vanished. And that was probably based around the idea that the financial markets could be de-seeded and entire governments could be overthrown through the power of this. And if you think that all sounds a bit wild, consider the fact that the Chinese government completely banned it because Bitcoin and other cryptocurrencies was allowing people to circumnavigate their capital flight laws, meaning that you could move large quantities of value out of China without having to even ask permission by the Chinese government. And so this particular technology, blockchain, which allows you to anonymously transact value across an immutable, decentralized, distributed blockchain, this is really changing things, not just in the financial markets, but in the legal markets, the medical industry, across supply and procurement, logistical stuff. It really is changing stuff. And on a day-to-day basis, we see multi-trillion-dollar companies, well, billion-dollar companies, Fortune 500 companies like Microsoft getting involved, and Cisco getting involved in blockchain projects, and basically building stuff that's powering entire product lines and services. And a lot of the time, like some of the protocol stuff that we don't understand powers the internet, at the very bedrock of what we're doing now, we actually see blockchain stuff powering a lot of the applications, but people aren't even talking about it because it's fairly misunderstood. So blockchain as a concept, blockchain technology is extremely important. It's one of the reasons I founded a company called Blockchain Finance with my partner, because we believe in blockchain finance, blockchain technology. Blockchain is going to change the world, and one of the first and the only and the best killer app is cryptocurrency. It sits on top of the blockchain. So I would say as blockchain continues to improve and as cryptocurrency becomes a legitimate asset class in its own right, we're going to see more and more attention paid to this. And it's going to be more and more difficult for the traditional market pundits to kind of wash it with a criminal element. It's just not going to happen. People are going to see through the misinformation and the myths and all that sort of stuff. So how is Bitcoin as a concept worth your time, and why is it changing the world? Well, if you believe that Bitcoin is an inherently good store of value, similar to gold or similar to investing in something that's a long-term project, then Bitcoin itself has proven itself to be really good. Like I said, a couple of years ago, 2-3 years ago, you could have bought Bitcoin for $600. A few years before that, it was like $80. A few years before that, it was 30 cents. So it is a good store of value over time. It's certainly a good temporary store of value as well if you live in a country like Venezuela or maybe in the Ukraine, where the value of your local currency quickly declines relative to US dollars. Sometimes, instead of hedging into US dollars, you can hedge, and by basically buying Bitcoin, you're maintaining and storing your value. So Bitcoin, very interesting. Also, Bitcoin is usually one side of a cryptocurrency trading pair. So very useful to be that based currency that you trade against. Bitcoin is also great for doing transactions where the traditional banking system doesn't exist, or where you want to move money around without perhaps disclosing the fact that you're doing it. That's getting into that gray area that we discussed, but at the end of the day, it's another way that Bitcoin is being used to transfer large quantities of value across the network and to pay and to buy things. So is Bitcoin becoming the next PayPal or Stripe or MasterCard or Visa? I don't think so. And I actually think that's the wrong way to think about it. I don't think of it as a sort of a fluid currency, like a digital breadbasket type of thing. I think that's more in line with stable coins like US dollar Tether and the JP Morgan coin that's coming out now. I think that's more in line with what those people are attempting to do. Facebook Libra, for example, coming up with a global cryptocurrency blockchain-based payment platform. I don't think Bitcoin was ever designed to be used well, in my opinion, as a day-to-day currency. I think it's always going to be the number one, the oldest blockchain, and it's always going to be the best place to store value. And I imagine it's going to become stable as it becomes more scarce. So Bitcoin very much still a thing. It's still a very important thing. It's not being used by criminals as much as people think. It's not a scam. It's just a new type of asset class that continues to increase in value, in many cases faster than other traditional markets. So it's a really great thing to trade in and against that. I'd say that probably answers most of the questions in relation to crypto, Bitcoin, and blockchain that I get on a day-to-day basis. If you have any more, leave them in the comments below. Like, share, comment on this video. I'd really appreciate it if you could spread the word about obviously Blockchain Education, which is our company, but also about Bitcoin and crypto and cryptocurrency trading and assets and investments. It's not a scam. At the end of the day, there's a multi-billion-dollar industry. Professional companies like Blockchain Finance exist in it. Multi-billion-dollar companies on the Fortune 500 exist in this industry and are working with developers every single day of the week. This is a new type of investment asset class, and you can make a lot of money trading crypto. Cryptocurrency is definitely here to stay, and so are we. All right, my name is Johnathan Regan. I hope this has been informative. If you have any questions, like I said, leave them in the comments below. We'll get back to you. Cheers.